Okay. Past couple of weeks, as y'all know, we've been having a very dramatic sell-off in the market. Very dramatic sell-off in the market. So it started on the 17th, and since then, it's just been a complete downtrend since then. The past 3 trading days, we had a little bit of a consolidation, but like I said, I really don't like anything until I just see um, some of these prices get taken out and pushed above and some nice support levels above 548. We got this gap zone right here, which is a supply zone. So pretty much what that means is, of course, um, it's going to try to trade within these levels, but you can expect for it to get rejected or consolidate in those zones. So that's why I always use the gap indicator on TradingView, because it allows me to see where those supply and demand zones are a whole lot easier. So you see, this is between 548 and 552. So even if we get within these zones, expect for a little choppiness, sideways movement. It's going to try to burn a lot of people weekly premiums on calls, even probably on puts. I think puts will probably pay better, but it's going to burn a lot of people's premiums on calls because you'll get a nice movement up and then you'll get a rug pull like we've been having lately going into the closing hours of the market. That 537 level was a recent demand zone. It gapped up here on 611 and 612. And once we started making this downfall here, I kind of had the idea that we was going to see this 537 level get touched, but it should get bought up pretty quickly. So as of right now, we got a big week coming up with earnings. AMD, Apple, Microsoft, Meta, and I think it's one more big one that I'm missing, but all of those are going to contribute to the downfall or to the actual upside of the market. So as far as finding the trend levels right now, what I'm going to look for is I always zoom out to see what's the strongest. And I like to look at it with no indicators. I think learning how to trade without any indicators is always going to be the best way to learn how to trade, since all indicators are lagging indicators. Price action and candle structure is going to be the best way to actually trade the market in real time, if that makes sense. So this looks like a solid, kind of a solid trend right there. Y'all bear with me. Like I was telling Chris a few minutes ago, it's the first time I'm actually going to try to do this on a PC. And I'm still trying to get adjusted to doing it not on my phone with my fingers and everything. So if it seems like I'm kind of slow with the trends and everything, or with the drawings, that's why. But this is a good trend line here. We got a good one, looks like here. I would take this trend here. And we might have another one, solid one. Right. Yeah. Which this one really not needed. I don't believe so at the moment. But my thing is, I'm always looking for rising trend lines. I'll check out AMD in a little bit too. Yeah, and I think AMD has earnings. I think I said AMD, but yeah, they got earnings coming up too. So as of right now, these are if you believe in AMD, I say buy stocks. Contracts are always gonna be a gamble. Premiums are gonna be juiced up. IV is gonna be super high. If you like the stock, which AMD, they play a big part in computers and probably other processors and chips and stuff like that. Um, they try to keep up with Nvidia, but I think if you like AMD, should always buy stocks or shares instead of actual contracts. Um, this is gonna be probably be my last trend that I look at right here. So, uh, falling. I really don't like that steep of a trend, but I'll ride with it. So normally what you guys see me do once I draw my trend lines, I go back and I change. Well, actually I should have marked them blue, but I go back and I change all the ones that I'm not using blue. And then I leave the valid ones white. Now, one thing that I did post earlier this week was RSI. And my RSI settings are different from what the normal settings are. I always attempt to slow down the price action or the volatility for lagging indicators because I like to get more concrete readings. So on my RSI link settings, I got the RSI link at 34, and then I have an SMA and I have the MA link at 50. I leave the charted time frame like it is, and I take that off because I like to see everything real time. And what I do is I go and I try to find bullish divergences on the daily time frames for um, the stocks that I'm trading. So with the SPY, I'll mark it up like that. And I very seldomly use the RSI two guys. Like it's just not a big thing for me because uh, it is laggy, but it's good. Like I was explaining to Chris earlier, it's good if you take 0 days because you can mark up the RSI and you can find a lot of good scalps if you know how to use the RSI the right way. If you got the right settings for it to play it, um, slow it down enough so that way you get a real nice solid movement. And you can take this and mark this like this is a bullish divergence right here. You got the first bounce, second bounce, third bounce. And once you start shifting down time frames, you're gonna see this blue line right here. Let me change it to what shows up good. I think I'll just keep it over it. Okay. So you will see this red line start shifting on smaller time frames, even the bigger time frames, just based off where you put the trend lines. Why it does that, I'm not really sure, but it does. But once you start scrolling down on some of the divergences, you'll start seeing how the market actually oversells below the line that you drew on the daily chart. So pretty much what that shows is let's say we go all the way down to 1 hour. And if you know how the RSI works, above 70 is overbought, um, below 30 is oversold, and then you have your 50, which is neutral. Um, if you were playing this on the actual charts and see how it actually correlates with the actual price action, um, you see you got this area right here, choppiness. You got this area right here where the price action is pretty much chopped in between 546 and 538. And then you see how the price action actually is moving down. So here you kind of got, well, down here, my bad. Down here, you got it approaching this oversold area, um, almost below 30. So since I do have the RSI settings to a higher frame, is it needs more price action for it to get below this versus if I was to have this on like 14 or 8 or something like that to where the moving averages are shorter, the volatility will show me, like, for instance, once this came down to 537, you probably would have seen the RSI shoot all the way down. So a move back down here would have to probably come somewhere in this zone right here, which gives me a solid short-term entry on calls. Because you'll get something like this. You'll get a move from 537 back up to 546. And I think all of this happened within a day span. Yeah, then you get Friday come and it comes back and, well, this is the end of Thursday. And then Friday comes and it comes back and retest these levels. So you're gonna always expect to see a move below this daily trend line here, and then you're going to see it push back up to attempt to break back up above or break back down and try to grab some more liquidity at lower levels to attempt another push back up. So at the moment right now, like if I was to mark off what I wanted to see or levels I wanted to see as support, it's going to be these lower levels here. And that's going to be my current support since that's the lowest levels that we attempted to drop down to, and it bounced. So like I said, the RSI, I like it. It's good for finding oversold and overbought levels on the daily time frame and using that for scalps and day trades. But as far as actually finding like long entries, unless it's just like a nice divergence on a daily chart and then it's working in confluence with what I have on my chart. Like if it's dropping down here and I see that it's oversold on a daily time frame for the RSI, I'll take it for the move back up. I'll buy a long expiration, probably 2 weeks out, just to avoid theta chop, and allow for the move to be made back up at least to somewhere around here. So if it drops back down here, I at least, since this has already been a challenged area, I at least see it drop and at least see this comes back to this 542 level. We also have a same type of consolidation over here too. So normally when you see these accumulation areas on the previous days on the chart, then you can expect for it to come and happen a little bit over here. I guess because this area right here has been such a big choppy level, this is why you've been seeing this sharp drop here and then the sharp back move up, because of all of this volatility and consolidation. Instead of it being so spread out here, over here is just real volatile. You're getting both levels in 1 day time frames instead of, this was probably what, 2 weeks of consolidation. Yeah. So you're getting this super volatile move over here. So going into next week, I'm going to be watching for the price action to hold up somewhere around 537, and then I'll be looking for rejections at the top around here and there. So if we do attempt a break above 549 and we get that price action go up, then that's when you're gonna see this gap be tested here. So you'll see it break out here and you will see an attempt to trade within this range. You might get a reject somewhere around here because this is a pressured area. You know, the market gap down right here for a reason. So once it trades back in here, you are going to see a pressure zone. So it's going to have to come down. It's going to have to grab some more liquidity before it goes back up. And it's going to attempt, it might not shoot up like that, but it may hit like this. And we'll see a supply and demand flip where the resistance becomes support before it attempts to make a push back up into this next zone here. And it attempt to retest or try to retest 52-week highs. And it's probably going to reject somewhere around here, but you never know. It just depends on how the earnings are going to come out over the past, over the next couple of days and next couple of weeks or whatnot. So you definitely want to be careful playing SPY probably over the next 2 weeks or so. I have been watching some of the options flow on SPY and Qs. It has been a lot of options call sellings for around the 550 levels. So right here where you have these drop downs, these gap downs and creating supply zones, you're seeing a lot of whales. They're either buying long dated calls and selling the short dated ones or vice versa. So like I said, just going into next week, you just want to watch this consolidation zone in between 547 and 537. It's $10 moves back and forth. If you're playing 0 days or 1, 2, 3, which I don't condone, by the way, I just have to throw that out there. But if you are going to play them, I'll just look for the consolidation zones within here. I will continue to grab longs down here. And if we do have to retest these levels down here around 535, 532, yeah, we have to retest them levels, which I don't think that we will. This gap fill back here from 612 already been tested and bought. So it's gonna need a flush in one of the earnings coming up in order to push this back down. And here's the next level of consolidation here. So this would be the next area that'll be challenged if we do happen to break below this 537 area. You will see a period of consolidation, or you will see SPY being bought up somewhere in this level. A possible little dip before it comes back up, but this would be a primary zone between 536 and 532 going into next week. If we do just happen to have some big companies, Microsoft or Meta or Apple, have some poor earnings or bad guidance, lack of guidance, or something like that. Uh, let's go to Q. Q's kind of had the same type of action too. Let's go to the daily chart. As you can see, we had a gap down over, a gap up over here. It tested it, but it flushed right past it in its attempt to get bought up here. But you got an inside bar. So that shows you right here that that's going to be some indecisiveness in technology, especially with earnings coming up once again. Here's your small level of consolidation right here. And that kind of mimics the inside bar that we have currently right now. So you could see a consolidation 461 and 465 somewhere in this area. What'll happen is it'll try to burn premiums on both sides, or it'll hunt for stop losses. It'll break below this level, kick people out, trigger their stop losses, and then come back up. Or if you're holding calls and you want to see another attempt run up, then it'll come up, pay a little bit, and it'll come back down and find um, support back within this area. If we're gonna go and find the long trends, I'm gonna take out and get a clean chart, and we're gonna zoom out. Sometimes if you just having trouble finding the actual rising trend line, you can always go up to a higher time frame and find it a little bit cleaner too. So look like we got one here. Yeah. If you want to stick. We got one looks like here. And all of these are just me charting off the weekly time frame. We got one there. If anybody have any questions, feel free to chime in. Um, I think that's look like I might have one right here too. But that one's already been broken. That's a good one. So boom. All right. So you got a few trend lines drawn up. You're not gonna find all of them in one sitting. Sometimes you're just gonna have to play around with them. Or, at times when I'm trading and we trading live, some of them trend lines I don't find until we just starting to break down in the market or break above. And I'm literally looking at the market, looking for the next level that we have for support or resistance. And I'm drawing them up there as I'm posting them to y'all. That's solid. That's solid. That's all I'm gonna mess with. So here's my QQQ chart on the daily time frame. Um, let's go look at the RSI on the daily. Okay. So what we can do, same thing that we do with the actual candlestick charts. We want to find rising support on the RSIs and see if we can find some decent bounces. That'll be one right there. And from there, I'll just go down to the daily. Like I said, when you start shifting time frames, you are going to see the lines move. But once you know how to read them, it's fine. You will know that those lines just correlate to different levels of support and resistance on smaller time frames. So here we are on the daily. You got a bounce here, and we're looking for a third touch here. So if we do get this third touch this upcoming week, even if we break below, I'll probably start entering longs on Qs, either a bounce or a break below, just because I know the market's designed to go up. It's gonna come back up eventually. I don't see it dropping all the way down to the 30 on the daily time frame. I just don't see it. Not saying that it couldn't happen, but just from me being in this market, especially around this time, I don't see it happening, especially with it already being oversold. And what I did was I just shifted down to the daily time frame. I mean the 1 hour time frame. So as you can see, here's my trend lines. 1 hour, you see an oversold price action here on the 1 hour, here and almost here, which is why I like to have the RSIs slowed down to a slower moving average, so that way I can catch better and safer moves. So if we come down here, you see when that price action dropped over here, you see the type of recovery it made once it broke below the 30. You took your calls here, you rode them all the way back up, probably to a $10 move or so. Here's for 413. You rolled that all the way back up to 428. And that's just on an oversold on a 1 hour with a slower moving average. Same thing here when you broke below this uh, daily trend line here that we drew on a daily RSI. When you broke below it, you got that break below here. And the next thing you know, you came back up. Here's your 442 level. Rolled that back up to 455. And this last break that we had here in May, I actually moved a good portion of my 401k uh, over to what we call it the post office, the C fund, which mimics the stock market, the S&P 500. So I moved a good portion of my 401k over right here, and it was a beautiful move all the way up to retest 52-week highs. But we got that nice move here, and then we're looking for another one here. As you can see, with the RSI, the reason why I just don't trade based off of it is because sometimes you'll get a move here and a move here, and it doesn't always line up with the absolute bottom, because the price action up here, it moved, but that doesn't mean that we can't go back and retest lows again here. And the 30 level on the RSI here may be different for the 30 RSI level over here. 30 RSI level oversold on the 1 hour may be down here somewhere next time. So like I said, it's a lagging indicator. It's just good to get into daily, like day trades or scalps. Friday, we took Google, and I actually took a September call. And that's because I seen how fast it dropped down on the RSI, and I got in even though it tried to retest and drop down. I think I took at 164 and it dropped down to maybe 163. But we closed on Friday with it around 167. That's just because I was watching a big move on the daily RSI. But it paid nicely. That's just one of the indicators that you can use the correct way to make some money if you want to take a day trade. Let's zoom in on the charts now. This is what my bread and butter is on price action, market structure, trend lines like the RSI, the MACD, Bollinger Bands, Fibonacci. They're all good, but like I said, if you can do all of this first, and then you can go and you can match it up with, um, let's say you go and add like your Fibonacci retracements. I don't know how many people have used them or tried them, but zero being at the top, one being at the bottom, that's bearish. Um, if you know anything about the golden pocket, it's between 50 and 0.618. And sometimes if it drops down even further, you get a 1.618. And that's your golden pocket, which is supposed to be the consolidation zone before the price action moves either up or down in the next direction. But if you can do your trend lines first and then add your indicators second, just to give you some confluence or some concrete evidence that you're trading in the right direction, then that's good. Fibonacci does change based off of time frames, just like here. Even though the 1 hour and the 2 hour both are bearish with the zeros being at the top, you go to the 4 hour and you get a bigger Fibonacci move that shows the zero being at the bottom and the one being at the top. Golden pocket being right here between 470 and 473, which lets me know it's possible the price action go right here if the one and the two flip and go from zeros to one at the top two. Let me not get too much into it right now. But looking at this, you want to look for consolidation zones. We just had one drawn up already. Right here. So we can watch for the price action to consolidate within the zone here. If the market does drop, the next area would be within here. But even if you're looking at it, even if you're looking at it like this, it's not much room in between this and this. So when it's a small gap between consolidation zones like this, that lets you know either A, you can get a consolidation and a quick drop and then a quick pump back up, or you get what we got right here. You'll get a smaller drop in this area of consolidation and it gets bought back up. Everything falls in confluence with the trend lines that you draw. So all of these will be my support areas. So right now I'll be looking for this was the last low. That'll be a trend line right there. And I'll tell you guys something like we got support at 455, 67. It'd be green because that is a confirmed level of support. And we'll start watching for resistance. Let's turn the gaps on. You see, this was a buyer zone here. So we'll start looking for the market to push this up here somewhere, and we'll look for actual resistance right here where it starts to retest the supply zone from the gap down. So once we see that, and actually what I'm going to do is I'm going to label the top of the gap zone here too. So I can turn off that indicator. So now what you see a nice little pennant here and here. I like triangle patterns. I don't really like looking for sideways movement. I don't like looking for downtrend, sideways downtrend, like downward channels. I like looking for rising support because that's where you're gonna get the most out your money. You get those sharp price movements back up when you find rising support. So since, like I said, 455 is already a tested level, we'll go down to the 1 hour chart and we'll look at the price action. So right now, what you see, I don't really draw trends on hourly time frames because it's easy to get burnt out of them real quick if you're trading options. But right now, what you see price action trading kind of like this. And you see the price action starting to narrow down in here. So what we'll do is, and every once in a while I do use my clouds. What you can see is you can see a false breakout. This yellow cloud right here, this pink cloud right here, both of those being bearish clouds. So what you could see is you can see this breakout to the upside. You can see this breakout to the upside, and it can be met by that bearish cloud right here, which is resistance, and that could push this back down and retest this rising trend line here. And if this being the 1 hour, this trend not being very strong, the bigger the time frame, the more solid the trend is. With this being a 1 hour trend, if this breaks below here, then I'll be letting you guys know, hey, be on the lookout for 455. And you'll see this come all the way down here with the descending resistance coming down with it. So uh you're not gonna see me calling calls, too many calls right now. Only time I'm calling calls is when we see a level being tested on rising support. The rising support level being right here at 455.67. And we got two levels here. So you could see 455 being broken, but then you could see 454 being tested here, which it can come right back up and still be looking for this 474 level. And with tech earnings being big this week, that's what I'm banking on right now. I'm looking for any type of sharp drop off this upcoming week, even if we even if we came down here to 440, which that'd be heaven for me because that'll just give me more of an opportunity to go long back up to 474. But even if we drop down from bad earnings from Microsoft or Apple or something, this is your next rising support level. So this is where you'll want to grab calls. The further down we go, the more money that you can go on leaps. Like the cheaper you can get these leap calls, and the further out the money you can go and sit on cash for the remainder of the year. Easy money. Like I said, I like puts, I like calls, but I love leaps because that's where you see majority of the accounts grow from being $1,000, $2,000, $5,000 accounts. You'll see big accounts be grown within a 2 to 3 month span, going from 5 grand to double that, 10 grand, because you're gonna make this 440, 435 move all the way back up to 474. And with tech being the way that it is, the future's headed towards tech. You're gonna see a lot of money be made within these zones. You just have to be patient You have to hold it for a good amount of time and pretty much just hold and see what's gonna happen. You don't have to trade every day. You don't have to, day trade and scalp and follow these guys' plays that I'm seeing a lot of people do and blow your account because the market is for longevity. Once you reach that $25,000 range, I mean, you can do what you want to, but if you're trying to grow an account, it's buying shares mostly because as long as you don't sell your shares, I mean, the money's gonna always be there. You continuously, if you're day trading or if you're scalping, take some of that money and just throw it in a company that you like. Google, Apple, Tesla as it's coming down, any of those as it's coming down, you just want to throw money in there just to have it's like a 401k or a savings just to hold and not have that theta bother your investments. I think somebody said AMD. Is he still in here? I don't think he in here. I think it was Jonathan. Oh no, he is in here. Daniel. All right, so go. So let's go look at AMD too. And for this week, I am looking at 455.50 for support. If it breaks below, we'll look at it from then. But as of right now, I'm still looking at 455 for support, 474 being the top. And I'm using the RSI on the daily time frame to map this out as well too, right here. If it breaks below, that's more confirmation on me to load up even heavier because I don't see us dropping nowhere near this 30 on the daily RSI. We break, we come back up, and then we should see a new bullish divergence trend form after the break below. We should start seeing bounces back up above here, and we'll have another trend line process. If it breaks, we'll have like a trend line here and something like that. Which just that's just more reason to load up on loans going into the rest of the year. Let me see if I can clear this. That's not it. I'm finna clear this chart on my phone real quick so I can get a better look at it. Boom. All right, so AMD has earnings coming up right now. Right now, it's looking like it could be gaps. It didn't fill the majority of the gaps. The next one that it has are down here like $70 and $80. I, I don't see it going that low. We have untested levels here at 173. So let's see what this looks like. I got you, bro. Um, all right, so you got that. Mm, and really it's been selling off big time. I know we caught that move up to like 185 a couple of weeks ago. And since then it's just gone, it's just gone in the toilet. I'm using this trend line as rising support. Because what we could see the same sharp move up, bounce, and then move up like this. Same thing that we can get on this side. You get that move down, short consolidation, another drastic move down. You could see this right here. Well, you might not see that today. You might see somewhere up here then. Yeah. So you could see the top of here, which is like 126. If it somehow fails off again, that'll be your next support level. If not, here's the consolidation zone here. And you could see the price action consolidate here between 142 and 133, which that'll be a nice level to go long on if you like AMD like that. I think all chip stocks are worth going long on. ARM, ARM, I think they have uh earnings this week too. But all right. So here we are on AMD. Like I said, AMD just it's been getting completely just destroyed. Um, I like it though. I like it as long as earnings don't destroy it. Let's see what the clouds got to say. All right, so you do have a little cloud action showing on the weekly and lining up with the bottom level of support that I have at 132. So if I go a little higher on the monthly, it's broken it's broken below this green cloud, but you do have rising support right here on the 1 month. It's at 117, but even if it drops down, this support should pick it back up. Buyers will step in around there. And 3 month is fine. So if you're gonna play this going into earnings, just watch for the consolidation because you got this red cloud right here. You got a yellow one forming too, both being bearish. You can watch this price action come up here and reject, or you can watch it continue to flush like it's been doing for the past month. You said that I want this is AMD would always move with NVIDIA. This is possible push down. AMD haven't moved with NVIDIA for a while. I don't know what happened, but the correlation between the two, it fell off pretty heavy. I think when NVIDIA hit that I think it was $1 trillion market cap or whatnot. I think that's when it stopped trading with with each other. Uh, I'm supposed to be able to split screen on here. Yeah, the correlation between NVIDIA and AMD, even though they both like top dollar computer chips, they both kind of fell off. And NVIDIA started trading on its own little price action. But as you can see, NVIDIA hasn't sold off nearly as much as AMD has. Does Nvidia still have room to come down? I believe so. It hasn't shown me anything as far as support. It's still trading with red candles. You know me, if I don't get a green candle, I'm not looking to go long yet. I'm just wondering if it's on Nvidia or on AMD. Wait, so mainly the chips, I guess. Uh, I'm I don't really want to make an assumption. That's why I say it's good to buy shares if you believe in a company. As far as the gap down, I think around here that might be the final area to just completely buy Nvidia, and this is 101 and $95 if one of the chips do happen to fail. Microsoft, ARM, AMD, Apple. If one of those chips fell in earnings, then yeah, we could see a flush on Nvidia down towards this $95 range, which that'd be a perfect opportunity to go long. If we was to try to chart Nvidia on a long-term perspective, got a trend there. Um, we have a trend there, and that's all I like right now. As far as rising trend lines that we could touch. So if I go back and if I add my gaps, it's possible. If we look at it, it's possible that that gap don't even fill. What could happen is if this line holds up, if this rising trend holds up right here, it's possible we see a move down and it touches 101 and completely moves right back up because people are gonna be expecting for it to fill, and this is a demand zone. So you'll see this pretty much hold up if the market happens to sell off, and you'll see it get bought right back up unless it just breaches this line and then it just continues and wants to sell and fill this gap down to 95, $94. But I can't tell you, if it's gonna drop or if it's not. Every day, I don't know what the market is gonna do until pre-market opens up and I start watching the price action move after about 7:30 my time, Central Standard Time. 7:30 is this when I start really looking at the price action of stocks to see what's gonna happen. And then by 8 o'clock, 8:30, I kind of already know what I'm gonna do or what I'm gonna give y'all for the day. So like I said, today, this week could be choppy, could be very choppy with earnings coming up. Um, and you just have to use the tools that you have. I do my best to kind of lead y'all and guide y'all and give y'all somewhat of a cheat code to the market, but nobody never knows for sure. I got so much drawn up on SQQ, which is inverse, but as you can see, clearly it's an uptrend, which has been showing me the uh, the downfall of tech at the moment. So this is what you're always gonna see me referring to, just because this stock is long-term bearish, short to medium-term bullish. But you can get good readings on this as long as you know what you're looking for. So right now, you're seeing a trend there. I don't know why I drew that so low, but a trend there. Another one right there. And just in case the market breaks, want to give a relief. So if you look at all of these trend lines that I'm drawing right now, it's just showing you that even if the market dips, it's all going to be a relief rally until we break below this last uptrend. Once we break below this last uptrend, then you can be like, all right, it's time to go long, and you can see it start making lower lows toward $5 or whatnot. But right now, until this breaks, below this last rising trend, market's bearish, short term to medium term bearish. So that's why I say it's no telling, um, how low the market's gonna go. You just have to use the tools that you have to know how to read them right. Um, I know I gotta have some. Okay, that's the last level of resistance. I had one right here, but it looked like that was when it broke out. Well, that was a fake breakout, but it actually tried to build because it closed a little bit above that line. So it actually tried to break out and go above, but it opened Friday here, and then it went up, went down, and closed flat. So right now, you can look for resistance to be around there, and you can look for support at the moment to be here at the lows and here at the lows. So when we zoom in on the actual hourly, this is what you're gonna get. This is what you're gonna see. You're gonna see the support at 879 and here at 850. If it breaches and breaks below this 850 mark, then you can see this gap being filled down to 820. And then if it breaks below here, you can watch for the consolidation. And the next move should be the move down toward this next gap fill here at there, 751. And this is how I go and I read the market ahead of time to know when to just go long and when to go short. So right now, I'm just gonna be watching for um, SQQ to continue the uptrend until it doesn't show me that it's uptrending anymore. We got supply zone. Like I said, this is a short-term bearish stock. So you'll see supply around here at 983. You got a little supply up here at $11, which I don't even know if it's gonna go this high, but until it shows you otherwise, you always want to play it with what it looks, what it looks like. So um anybody got anything that they want looked at in particular? 'Cause that's all I really got. Bitcoin looks, well, it did look decent. 68.8. I got it going to at least 72 coin. Of course, coin is gonna follow Bitcoin on the first. We got rising support here. Looks like we got one here. And this is there. All right, so that's what we got right now on coin. Make sure it's not anything greater. Yeah, we just have to look because it looked like it broke out of everything else as far as the downwards um, resistance. So right now we just have to watch it as far as the consolidation goes. I think that gap got filled, partially filled. Yeah. So that gap was partially filled here. The full gap fill would be down to 221. I don't know if it's gonna get filled or not. It just depends on how Bitcoin going. That's kind of a consolidation zone right here. But we just don't know. I would look for support. Mm, Let's do support around right there. And see a supply and demand flip there. And then we'll look for a resistance probably up there. See if it can break highs right there and right here. So as you can see, it will move in crazy big moves. You can watch support down below 233. Within a trend, it'd be 226. which this is the lows of Thursday, look like Thursday's lows. And if it breaks below here, then we can see it fill all the way down to the 218 mark. So yeah, if it breaks this trend here, then you can expect this to get filled and then look for some consolidation down to about 218, 217 before um, it decides it wants to move back up. If it doesn't break and it continues to push and follow Bitcoin, we can see it completely blow out of this supply zone here and push back up. Lately, when Bitcoin moves, coin has been opening up around $11 to $13 uh, in the pre-market, and then it'll move another $10 or so, either continuing going up or a retracement back down. So we could see it move back up towards 265. As you can see, this was a clean move down. I mean, we had a little choppiness right there, but this always a clean move straight down. So we could see a clean move back up and have that V-shaped recovery back into resistance. So last time that I checked, the theta and the IV on coin contracts are crazy. Even if you go with a further out the money expiration date, um, if you can't afford to, I say play a day trade on it uh, into strength. If Bitcoin is running that day, and you want to make sure that Bitcoin is on an uptrend that day, and not just an uptrend to come back down, you can take a day trade and you can make some nice money since it does move like $10 a day. If it's consolidating though, you will see a move like we did Friday to where you just see this area right here just heavily consolidated and burn premiums. So that's what we'll want to watch. You don't want a heavily consolidated day like this. You want to make sure Bitcoin's moving in a way that it's supposed to. So that way you can make nice profits on the run up. And right now, like that's what I have right now on Bitcoin. It's been having this consolidated move over the weekend, which that's completely normal over the weekend. But we'll need to see a break above this 69.5 level in order to see a continuation back up towards 72 or break below this 66.8 level. And you'll see the retest here and make a move back up, or you'll see it break down to here and then try to move back up, or you'll see it move down here. It just all depends on what the market's gonna do and how consolidated it's gonna be. And normally when you see drastic drops, like it moves down into one of these consolidated zones here, normally you just see a oversell, a overreaction, oversell, and it'll drop down just to come back up and consolidate within here before pushing back up more. So it doesn't always bounce here. Sometimes you just see the exaggerated move down. So investors or whoever can get in at a cheaper price because they know the volatile move that you see over here is going to be the same volatile move you're going to see back up over here. So that's just what we want to watch with coin. I think earnings are coming up soon on the 1st. So you will just want to watch for calls around below 233. I'll grab calls into 228. Watch for the breakdown. to break below this trend line because it could drop down and fill this all the way this time and come down to 218. But if it holds up, you can see it go all the way to 265. I don't like taking entries on anything that's in here. Like this is no man's land to me. You can see it drop down or go up in any zone, bro. So, but hope that answered your question. Anybody else? Cool. Well, appreciate everybody that tapped in with me. I hope I helped everybody out and see you guys in the morning.